This market's frothy as heck, but Mohamed El-Erian has a couple of really interesting points that's going to make you think twice about selling that Bitcoin. Going to get to Mohamed in a second. I just want you to listen to these money managers real quick because their viewpoint on Bitcoin is eye-opening.
So Steve, let me start with the most basic question I genuinely have, which is what is Bitcoin? I sort of understand blockchain a little bit and know that it's made up, but what is it as an asset?
Well, that's a good question, and maybe I'm not exactly the right person to ask because I'm on the more skeptical side of the ledger on this, but essentially it is a currency that was created, and the theory behind it is a certain number of Bitcoins have been mined, and there will never be more Bitcoins, and therefore you can have some confidence in the value of it because there's a limited amount of these things, and they therefore will retain their value. And if I'm sounding a little bit halting, it's because I don't completely buy the whole thing. You're essentially saying that we're going to create a store of value and a medium of exchange around something that only exists inside of a computer somewhere. It's not a physical asset. And so you look even at gold, and gold is a physical asset. Gold has other uses besides simply people investing in it. We put it in jewelry, we put it in dentistry and so forth. And it has been a store of value for 5,000 years, and people have accepted it as a store of value. So the idea that Bitcoin is some kind of store of value, to me, it kind of feels a little bit like wampum. What's the difference between Bitcoin and wampum?
Oh, Steve, the difference between Bitcoin and wampum is I can't make more Bitcoin. I can make more wampum, right? I can go down and collect more seashells, Steve. That's the difference, right? Isn't that a thing, Steve? Maybe? Is that a thing?
Which was a store of value in Native American times. So I'm a little bit on the skeptical side of it, but it is intended to be by those who believe, including very, very smart people like Elon Musk, as a medium of exchange and a store of value. And they are moving very fast in that direction. And we're going to find out sooner or later whether that actually works or not.
So, Afsani, is there any ready analogy? I mean, is it like a commodity? Some people say it's like a commodity. Is it like a currency? Is it like a security? What is it?
You know, it has behaved a little bit like gold, particularly in the last probably 12, 18 months. But what has also been interesting, I think as Steve was saying, it has a limited size right now. What is it, about 900 billion or so that has been issued? And so when we talk about the...
I have to jump in here just because they seem so uninformed. Like, it seems like these people are in charge of literally millions of dollars of people's money, and they haven't even read like a little paper about what Bitcoin is. This woman's quoting the market cap of Bitcoin. No idea how many Bitcoins are in circulation, will be in circulation. It doesn't seem like she actually knows what it is, which is stunning.
0.5 billion that Elon Musk bought and put sort of on the cash books of Tesla. It's not that much. I was really surprised that he put it on the cash side because it is so volatile and so much more volatile than gold has been. So if you are going to include it in a portfolio, and I think, you know, the jury's still out as to whether it will or will not have staying power, as Steve was saying. But let's assume that you think there is some staying power. With something that is that volatile, would you put it in your cash portfolio, or would it be like a pretty high risk, high volatility part of your opportunistic portfolio?
Afsani is absolutely right. What we are hearing and seeing among people who do what we do, managing really large pools of capital in a diversified way on behalf of wealthy individuals or charitable causes, they are actually moving to do this. They are actually allocating 1%, 2%, some relatively small amount of their portfolio.
He just told us that the people he knows, he's in the money management field, are allocating 1%, 2% of their holdings to Bitcoin, or are in the process of doing that.
To Bitcoin as an inflation hedge. They see it in the same role that commodities have played, although I don't think it's a commodity, David, because the quantities are so limited. The same role that commodities or gold or things like that have played historically. Institutions are actually now doing this. They're putting it in their portfolios thinking it's a good inflation hedge.
Would you put it in your portfolio, Steve?
Until someone convinces me that there's some real reason to believe that it is a store of value and an inflation hedge, both, but at least a store of value that will be accepted over the next 10, 20, 30, 40 years, I think we're going to hold off until I get some conviction.
10, 20, 30 years, he's going to hold off. Guys, this is the majority of money managers are the same way. They don't buy in right now. Totally understandable. They need to be safe with their people's money. But the reality is they don't actually get it. They don't get what it is. They don't actually understand the fundamentals of what it is, which is very simple. But they don't seem to understand the fundamentals of it's a limited supply. And then after that, the only thing that really matters is that it's agreed upon. After that, it's the only thing that matters is that it's agreed upon. We could all agree on wampum today if we wanted to go back in time with Steve. We could agree on it today. The problem is that people can make more, it can be destroyed easily, all those sort of things. That's the problems that Bitcoin solves. And a lot of people, guys, this is it. A lot of people at the money management level don't actually understand that, which I think provides a great opportunity because it makes it seem like, wow, for 50,000, 60,000 Bitcoin, 40,000 Bitcoin, whatever it is today, might be cheap. Like these guys haven't even gotten in the game. The big money hasn't even gotten in the game at all. Like Elon and Tesla are just the very, very tip of people dipping their toes into this.
Afsani, what about Rock Creek?
You know, we're looking at things like custody rules and seeing how sort of the new regulators will start looking at Bitcoins, which is still not clear. But at least we know that with Gary Gensler and others coming in, they have a lot of knowledge of how the financial system is changing with these new tools. And we'll look at this carefully. So for us, I think we will start looking at it a little bit more seriously, a little bit less skeptic than Steve is, and we can compare notes in a little bit.
Okay, thank you so much to our roundtable of
starting to look at it. They're starting to look at it. I'm telling you, I saw this and I'm like, wow, man. I mean, I knew Elon getting Tesla involved was a big deal. Of course, it's a big deal. It's a step. But this reminded me that we're not even at the start of this thing. It hasn't even started. Basically, this is retail moving this price up and a couple of early wealthy investors like Tesla. But we're not even at the start. If you think Bitcoin's the thing, like, of course, there is risk, massive risk. Something could break the blockchain. Somebody figures out how to hack it. It gets destroyed, whatever. Something could happen. There's massive risk, of course. But if you believe in Bitcoin and you believe this is the future, that price hasn't even begun to move. Now, quick transition, because I saw Mohamed El-Erian did a interview on CNBC, and I thought it fit right along this line because I think Mohamed knows what's going on and can give us also that really, really big money perspective. So let's check out what Mohamed has to say.
First question is about positioning and inflows. When you look at all the data there, is it suggesting things are going to rise further from here, or are we getting a little bit stretched?
Thanks for having me, Wilfred. It's suggesting both. So the path of least resistance remains up. We've just had the highest weekly inflow into the equity market ever. So people are putting it to work. Charles.
The highest inflow into the equity market ever. Amazing. It's completely amazing. And the reality is there's a whole nother, $1.4 trillion of stimulus coming into this market. And Mohamed has a really interesting outlook here about the whole situation.
Bob's reported that there's been a massive increase in account opening and there's more liquidity on the way. Having said that, we are at rather elevated prices, but this is all about liquidity. You've heard me say this over and over again. It is technical. The path of least resistance is still up over time.
When you see something like...
Very interesting. I mean, I'm all for taking profits, and I've been advising people all week, myself included, took some profits. But then I start hearing this, and I say, oh man, that 1.4 trillion in stimulus is coming in. Where else is this money going to go? It's got to go somewhere. Is it going to go into the market? Is it going to go into Bitcoin? Is it, where else is it going to go? Real estate's already tapped to record highs. There's only so many places to put cash to have easy access to it. Let's see what else.
Tesla, which has been a darling, of course, of the market, buying Bitcoin, which has also been a darling of the market. Do you start to think this is marking the top, or is it a bigger transition that's bullish for both assets?
So that one has a specific element to it, which is the broader acceptance of Bitcoins. And it's not just Tesla that is saying you can use it as a form of payments. It's others too. But you could have had in that sentence so many other things. You would have had SPACs. Look at the amount of SPAC activity we have had. Everybody and their brother and sister are opening SPACs. You could have all sorts of things that indicate that we are frothy. But remember the notion of a rational bubble. Yes, we are in bubble territory, but it's rational because of all this liquidity.
And the liquidity keeps flowing, Mohamed. The latest is Secretary Janet Yellen, in her first call with G7 finance ministers and Treasury secretaries today, brought the go big message there, that now is the time to do something big on the economy. And yes, they were talking about sort of technicals of expanding the IMF firepower through SDRs, but what is the potential for more stimulus, not just from the United States at this time?
So she took the message go big to apply both to national budgets, where she's going to have less success, but also to apply to the IMF SDR issues, which is basically an issuance of currency, that if it happens, countries will wake up and find that their deposit account has gone up at the IMF and they can spend it. So I think she will succeed on the global liquidity element because most other countries will go along. But she's not going to be able to move other countries very much on their own budgets. The US is going to be way ahead. And if you just do the numbers, it is incredible how much liquidity is likely to be injected in this economy. The big question is, will it create an accident? At what point does a lot of liquidity become too much liquidity?
With that in mind, Mohamed,
is there going to be an accident? Yeah. I mean, is there any way we get out of this thing just complete destruction? I mean, there's just no way, right? There's no way. This can never end well. So do take profits at some point. But, it's just you pump multiple trillions of dollars into the economy, into people's pockets. They just buy stuff. They buy every stock on earth. The crypto market's going absolutely bananas. Everything's pumped. Literally everything's pumped. What are you going to do? What are you going to do, Mohamed?
Are you a believer that the dollar is due to weaken further, despite already having been soft of late? And why isn't gold performing better with all of this liquidity out there?
So first, I'm not a believer that the dollar will weaken a lot from here. I think we've seen most of the weakening because it is about more than just liquidity. It also has to do with vaccine distribution, where we dominate Europe. It has to do with the dynamism of the economy with foreign direct inflow. So if you add everything up, it doesn't look as bearish for the dollar. So that's one. Two, gold, part of the attractiveness of gold has gone to Bitcoins. And I think that explains a lot where Bitcoins is as well. Gold is no longer seen as the only defensive vehicle. Now Bitcoins is starting to attract a lot of people that are in there for what I call negative reasons. You have the positive reasons, people that believe it's going to be a global currency, that believe it's going to be a form of payments. And then you have the negative reasons, people who just are protecting themselves against all sorts of things.
Great stuff by Mohamed. He's sharp, and that guy's got some amazing viewpoints. Agree with him on most everything. And his view on the liquidity, I knew that, and I think everybody kind of knew that intuitively. You pump trillions of dollars in, but he just reaffirmed it like, hey man, we might not even be, yes, we're in bubble territory, but with all this money coming in and it is being pumped on the international and national level, what's going to happen? Probably stuff is going to go up more. As they say, pop upwards. So keep that in mind, guys.